So when you have no revenue, all what you have to do is to just fall back on your balance sheet and the war chest that you typically have. Suddenly that war chest, which was in a business as usual case, which was looking healthy, suddenly when there is no revenue, it starts to look pretty small because your fixed costs are very, very high.
Welcome to Prime Venture Partners Podcast, a podcast for entrepreneurs looking to build and grow their startups. Learn about uncommon strategies and common traps from makers and doers of startup ecosystem.
Welcome to the Prime Venture Partners Podcast. Today I'm delighted to have with me my former colleague, boss and friend, Rajesh Magow, the group CEO and co-founder of MakeMyTrip. Welcome to the show, Rajesh.
Thank you, Amit.
Rajesh, I've obviously worked by your side in the trenches for a few years at MakeMyTrip, but I call you the man for all crises. And so this really, I wanted to dig in during this COVID-19 time that we're recording this podcast on the various crises you have seen in your career, particularly at MakeMyTrip. I can think of 9/11, the 2008 financial crisis, Kingfisher, and now COVID. So can you take us through a little bit of your experiences with these various crises and what you've learned through all of these?
Yeah, sure, Amit. And you've been very kind today. So thanks for that. But let me just give you the learnings over the years of going through all kinds of crises that we've had. And I think before I start there, I think it'll be fair to say overall travel business is a very cyclical business. So it does go through many cycles, and over the 2 decades now of MakeMyTrip, actually it full 2 decades because the company was incorporated in year 2000. We've had our share of many crises, big crises, and this one seems to be probably bigger than all of them put together. And let's talk about that in a bit. But be it like you called them out, whether it was a financial crisis or SARS early days, or it was 9/11 early days, or also the fact that a couple of airlines have gone down, not only Kingfisher, but just recently, just pre-COVID, we also witnessed jet going down. So there has been no dearth of the difficult cycles, and some of them led by macro crisis. And clearly, from our point of view, there has been tremendous amount of learning. So while you walk into this probably mother of all crises, you definitely have some learnings with you from these crises when you have gone through some of them and weathered that storm. And I guess when you look at some of these learnings from the past, there are a few that comes to my mind very quickly, and then we can go deeper into it. But just on the top of my head, the most important one is that a lot of the time what happens is when you're hit by crisis which you weren't really expecting, then you tend to panic. And I think if there is one thing that you have to control at that point in time is to take a step back and not necessarily panic and overreact, because it's time for you to actually absorb very quickly and think through and not necessarily overreact. And then more you start thinking about it, at least, you start more towards finding the solution, even in the difficult times. First, taking stock of what's going on. It also becomes a very dynamic and a fluid situation typically. And when we were hit with the crisis earlier, we were very, very small, and it was probably, relatively speaking, pretty easier now. I can say so, hindsight, looking at now for the last couple of months, this particular crisis, that maybe that was almost like a cakewalk. To be honest. But and the reason for that is probably there was, we were small, and the size of the company was small, and we were able to just, we were on our feet, we were quick, we were agile, we were like a startup like. We were also not public, and that adds to another level of complication as well. And we were able to just, probably take it a little bit more calmly and thinking through and focusing more on confronting the problem rather than just getting panicked and then overreacting out of it. So that's really the big one. And then obviously you have to just probably divide the problem into two, which is what is that you need to do, especially, the crisis which will probably question your existence. So these will be existential crises. If you talk about now COVID, it clearly is more like an existential crisis, right? So what you need to think about is, how would you survive first, right? Rather than just thinking about anything else. So that's definitely one track that goes in. That what is your strategy to survive first, and then the second parallel track, whether you like it or you don't, you also have to figure out your path to recovery and how do you come out of it, and how are you going to rebuild the whole thing at a just a very fundamental level. This is how you typically approach it, if I may just say so. Clearly, by no stretch of imagination, this is an easy task to do. It is extremely, extremely difficult. It is rough. It is painful, but you don't have a choice. But basically, you have to just keep your head down and try to just navigate through this crisis.
Great, Rajesh. So clearly, one is stay calm, don't panic. Number two, take control of the situation, right? Because it's you have to confront it and get through it. I want to pick on two things you said. One is that when you were as a company younger and smaller, it was it was easier to navigate the crisis, right? That seems a little counterintuitive. We have a lot of young entrepreneurs listening to these podcasts. They're thinking, look, I'm like a small company, don't have a balance sheet, don't have cash. And you also said something about by being public, it's also a little bit more challenging. So can you elaborate on the advantage of being small, and in what way can people take that to their benefit?
So, if you think about small, the difference is that when you have reached a certain scale and size, your cost structures have also bloated. So, when you start looking at it, a scenario where there is no revenue, literally, as the case has been for the last couple of months. So, when you have no revenue, all what you have to do is to just then fall back on your balance sheet and the war chest that you typically have. Suddenly, that war chest, which was in a business as usual case, which was looking healthy, suddenly when there is no revenue, it starts to look pretty small because your fixed costs are very, very high. And when you're small and young, your fixed cost is not that high. You can also take those decisions very quickly to optimize some of them. When you're large, like in our case, 3,000 people on roll, three brands now, MakeMyTrip, goibibo, and redBus, and also having third party roles, another 3,000 people. So suddenly we had to start thinking about 6,000 people fixed costs, besides the facilities, the infrastructure, the tech infrastructure, and overall, all the components of the fixed cost that you needed to look at, keeping in mind the watches that you have on our balance sheet that you will have to fall back on. So when you link it with the two, then it becomes far more complex. When you're small, I think, yes, in terms of the resources that you might have, or the challenge will be there in terms of probably raising more capital. But the fact that your cost base will be very, very low, for you to be able to just the amount of money that you need to take care of in the crisis time to manage your cost is not necessarily as big an ask. So I think from that point of view, it only helps. Now, in terms of private setup versus public setup, it's a lot more complex, because just the stakeholder management, the investors, the level of scrutiny by the investors, institutional investors, and all this is far more in a public listed company, especially in company listed in the US, versus the small startup, right? Because young startup has a board that they are accountable to. But the public listed company, you have many considerations. You have reporting requirements, and you have analyst community that you have to just deal with, and you also have the investors' perception that you have to deal with. On top of it, what also makes it even more complicated, that in a private setup, the valuations and all that, yes, that might get impacted, but at the end of the day, it's probably easier for the startup founders to go back, if the fundamentals of the business haven't really changed, take a long-term view, still pitch for some correction in the valuation in a private discussion. But in a public listed company, given that it's all out there and it's also very quickly benchmarked with the other peer group, etc., then it makes it far more difficult, because the stock markets have fallen, and there has been a panic reaction and so on. So I think in many ways it becomes more complex and complicated when you are a large and a public listed company, more so during the crisis time. Actually, there are many, many advantages when you are a public listed company in terms of the platform that it provides you and the peer set that you can be compared with globally when the business is as usual. But when there's crisis, then obviously there are then the opposite is true as well.
So, Rajesh, I know you're also on the board of Flipkart and you have been for a while. Why are companies like that are quite successful choosing to not go public? Of course, crisis is right now somewhat of a black swan event. But in general, you notice larger and larger companies, including India, right? The likes of Flipkart and many others, unicorns and so forth. Is it just the public scrutiny, or is it that it's been easier to fundraise in the private market? Maybe just your thoughts on
Yeah.
IPOs.
Yeah, sure. I mean, it's a very good question. And I think it's more the latter, Amit. What you just mentioned, off late, if you look at it for the last, maybe about 10 years now, definitely 7, 8, where the private market in India, private capital market in India was very, very hot. I mean, the amount of capital that India attracted, especially the internet tech stocks, was very, very good. And that ecosystem actually became far more stronger. There were a lot more private equity players, the VC ecosystem, and institutional investors looking to invest in the private stocks. The ticket size is increased. So you go to public market, definitely one of the reasons for that is access to larger pool of capital, and that was available in the private space. So therefore, probably while you were on your journey and a lot of these internet stocks were not necessarily profitable or probably had the line of sight to profitability in the last few years as they were going through their growth journey, I think it was a sensible decision if the pool of capital is available in the private space, right? And maybe there is also an advantage of, well, I actually call that particular advantage as a short-term advantage of higher valuation, and we all have seen that happen in the Indian market as well. But that eventually catches up, in my view. So eventually you will get to a point. You will probably enjoy the benefit of higher, private setup, higher valuation relative to the public market valuation. But that will catch up because eventually you would have to think about liquidity option, which is the second most important reason that you go to public market, unless you want to do a kind of an M&A deal or think of any other exit route. But a lot of the companies will have to then fall back on public market for exit options. So for when you look for those exit options, I think it catches up at the overall valuation business, and we've seen many examples of companies going public and then valuations coming under stress. So that I would call it as a very short-term advantage, but the availability of capital was perhaps the one, and combined with the fact that it gives you more flexibility to continuously keep going on growth path, and not necessarily, one has to just be probably, in front of the higher level of scrutiny and so on. So primary reason, definitely availability of more cash, that probably led to that. But having said that, if you look at even for Flipkart, so the transaction happened, now they're part of Walmart, and Walmart is a listed company. So, from that perspective, now at this stage of Flipkart, while the entrepreneurial kind of environment continues, but at the end of the day, they would be, they're a majority held by a US listed company now. And similarly, I am definitely sure that many of the other unicorns eventually will have to start thinking about paths to profitability and then trying to look for exit road. And then one of the exit options would be publicly listed companies. So I think eventually you will have to go down to that path. And it's just a matter of, this whole journey. And if you see that journey is going to take long, and during that journey you can afford to have, there's availability and you can afford to have private capital, why not?
Right. Rajesh, there was one more thing, because particularly given your finance background and you were also the CFO when MakeMyTrip listed, which is that, having strong, fiscal and sort of corporate governance and this focus, like you said, on unit economics, contribution margin, profitability, right? Somebody just recently said, profitability is the new product market fit. That also, I think, if you're on the path to listing for an IPO or whatever, you keep those things very quite intact. Do you believe that? Because otherwise, it ends up being that you just have access to capital and you just growth at all costs. And therefore, when you suddenly say, "Oh, now I have to go to the path of profitability," that ends up being a very tough ordeal.
So, I see this as the stage of, as the complete journey and various stages of life cycle of the business. So there will be stages where you would need growth capital. And during that stage, and again, it will vary from business model to business model. It will vary from different organization to different organization. So when you follow very carefully your stage of life cycle of the business, from a build up stage to a growth stage to a matured stage where you will have some line of sight to profitability, that will be the journey. Now, during and how long will be a particular stage of life cycle will vary from company to company, will vary from business model to business model. And I think the most prudent thing to do is to make sure that we don't lose sight of these stages and get carried away with the only the availability of capital that you have. I mean, there are n number of examples that you could look around without calling them, where you would see the examples of people getting carried away on one particular stage of life cycle of growth by getting more capital as a fuel, and going very aggressive, more price disruption more than anything else. I'm not sure that is long term sustainable. Now, coming to your point of the fiscal discipline, corporate governance, and all, most definitely you will have to have that in place. Actually, I would say, I would first link it to the scale of the business. I actually fundamentally believe that you are not necessarily able to scale the business, depending upon what your scale ambitions are, scale the business very well, unless you have some method to the madness, right? I mean, you can't just be completely going haywire, and that brings in some sort of operating discipline, that brings in some sort of fiscal discipline as well. And as you enter that level of maturity, so as you enter that stage of life cycle where your business model is maturing, you have good repeat rates coming, let's say B2C business, right? So you have reached a good, decent market share, you have reached a level of maturity where there's a lot of repeat business coming in, you are already getting on the cost side economies of large scale, you are entering into that stage. Now, in that stage, then, you can't not have the fiscal discipline. Maybe you can get away during the growth phase a little bit. But as you go along in that stage, you will not be able to do it, because if you do that mistake, then you will slip away and then you'll get pushed back and then you'll have to restart again. So I think it is very important to bring in that fiscal discipline, corporate governance, for you to be able to then think of a clear roadmap to go public. That is the way I think the journey plays out, at least in my own learning experience.
Fantastic, Rajesh. So switching gear, let's talk about travel. I clearly one of the worst, if not the worst, impacted sector in the economy, right? Retail or physical retail probably comes closed. So, how are you dealing with this, and what is the macro kind of view in the world? Since you're also listed in the US, you have, follow China, etc. So, can you talk a little bit about travel and what your assessment is, what the broad prognosis is?
Yeah, sure. Like I said earlier, it definitely one of the worst hit, one of the biggest crisis that we are dealing with in the travel space, the overall category, and the whole of travel, right? I mean, not necessarily only intermediary space, but also the whole of travel ecosystem. So travel and tourism put together, including civil aviation, hospitality, and so on. So, if I start looking at, again, like I said, in two parallel tracks. One, right now, the track that is going on clearly is that the whole of industry is trying to see how do we survive this crisis, right? I mean, all the players. I mean, invariably, there are going to be casualties. It's going to be extremely painful, and so on. And I think it's all a function of, the resources that you have, how well you manage your cost, during this phase, and your ability to probably raise more capital in terms of just having additional resources at your disposal for you to be able to manage this crisis. And more so in COVID case, it seems like that it's going to be more a long haul than a short haul, and the speed of recovery is also going to be slow. And various estimates going around in the industry, but from my point of view, I do think that it'll be like a for industry to get back to pre-COVID level of the peak probably would take it around 2 years, if not more, and therefore these 2 years is just going to be rebuilding phase and slow and gradual recovery, and that probably is going to be true globally. I think one of the worst hit out of the overall would be, or maybe the biggest change that will happen is that I think the focus is going to get shifted to from global tourism to domestic tourism. I think it's going to be across the globe. The international travel, the global tourism is going to take a long time to recover. It probably is going to be the last one to come back. Yes, some of the countries might be more aggressive. I mean, we'll have to wait and watch. But all things considered, I think this is going to be a fundamental shift that will happen. It'll happen in India. It is already happening in China. To give you an example of China, we've been watching very closely, given C-Trip has been on our board as well. In fact, we've been learning a lot from them, and China is definitely showing some hope to the rest of the world. In terms of just the way they are recovering in their travel space. So there, the recovery has already started. In fact, domestic, they did see some pent-up demand, right after the lockdowns were lifted, etc. in that country. It's slightly different because, unlike in India, the country was not completely locked down. But whatever it was, right? It started there, but it has started to recover. The domestic business has come to about 60% level already, but there's no signs of international travel starting there as well. And similarly, I think Europe might open up within the European Union. Some of the countries might open up the borders inter-country, but not necessarily long haul flights and so on. So I think the global tourism is definitely going to be taking time. I don't think India is going to be any different. I think India will also be a lot more. The recovery will be led by domestic travel, and then within domestic, it will be lot more essential first. Some work-related travel, and some kind of leisure destination. I think the only other hope that might change this whole speed of recovery, if you will be if there is an announcement of a cure or a vaccination. So let's say by December, or in the next 9 months to 12 months, we have something that is announced which is credible. Then I do think that changes a lot, because it would address a fundamental concern in people's mind, and that is fear and apprehension right now. So if that gets addressed, things might change, and we would certainly be hoping and wishing for that. But all things considered, at this point in time, it doesn't look like the recovery is going to be very fast.
Wonderful. If you're a young entrepreneur and thinking of starting something in the travel sector, people always say some of the best companies are built during downturns. Even Airbnb in the travel space, although like everybody else, they've been hit recently, was started in the 2008 2009 financial crisis. What would you encourage them to do in terms of thinking about ideas, right? Because you're obviously the 800-pound gorilla, certainly in India and greater India. But how should a young startup who's just starting up now or thinking about starting up in travel think about opportunities or scoping out opportunities? Or would you say stay away, don't bother? We're all just surviving right now.
No, I don't actually think that people should stay away. I'll tell you why. Because every crisis actually presents an opportunity as well. And I think right now everybody's business model is getting challenged pretty much, and that is also one of the potential learnings from the past, and more so now that everybody is kind of busy reimagining the new normal, new business models as well, and also looking at opportunities, different ways of doing it. I think this COVID has taught a lot of people a lot of the new things. The operational protocols, the reimagination of the new business models, the new opportunities, new avenues for monetization, etc. And I guess that is the exercise that's kind of I'm sure will be on everybody's mind of all the existing businesses. And for a new startup, actually, one has to just obviously see. I never fundamentally believe that you should set up a startup thinking 2 years, 3 years time frame, and let's just do an experiment, see if it works. Otherwise, we let's just get out of it. And therefore, if you are actually taking a long term view of thinking through about the space, I don't think the excitement around this space changes, the opportunity around this space changes. In fact, it does open up in many ways new potential, business models, new potential way of in the post-COVID arena, addressing the new normal of travel. So there could be interesting, niches that could emerge out of potentially emerge out of this. So I would actually encourage that people to continue to keep evaluating. I mean, you have to evaluate the space relative to many other spaces that would be open when you're thinking about starting a new sector or a new startup. I mean, you can pick up any sector, and a lot of the people, there will be always tendency to go for a more hot sector. But I think for the evaluation criteria should not be limited to the crisis hit industry, should be more thinking the space, as if there was no crisis, and more from a long-term standpoint. I'm pretty sure actually that, this will give birth to some of the interesting new innovations in the space as we go forward.
Great, Rajesh. Rajesh, since I've seen you personally in action, you have a very Zen-like demeanor, right? And which is why I reached out to you for this podcast. So what do you do on a regular basis to stay calm and composed? I know you love sports. I know you play cricket, probably badminton, many other things. Maybe just a little bit on your personal self on how you stay in control and, like you said, not in panic, sort of more in Zen mode.
Yeah, if there is one thing that I've been actually missing, because that used to be my meditation. I mean, I used to play cricket regularly, but off late for last couple of years, I've been more into having my regular baddie game in the morning, and that was my meditation, because it helps me, stay in the game and not think anything else. So if there is one thing that I missed a lot, was actually during this lockdown, was that, unfortunately. But then what do you do? So what's your fallback? And, what I've tried to do is to fall back on two things. One, I like to then walk, and with my earphone on and some music on and all of that, or some audiobook, and then walk. And then the other thing that I was never big on, my wife was, Manju, that you know well, and she has been after me for yoga and all, and now it has been a perfect time for me to actually make her happy. So I've been learning some yoga exercises as well, and doing some routine, or at least alternate days, some yoga exercises as well. So I think that helps. But I think I'll be lying if I would say, to be honest, if one would say that, yes, I'm preaching that one should not panic, that the mind will not be occupied. Mind is tremendously occupied with all the challenges around right now. But what you have to do is to make sure that you keep doing your best and not necessarily lose your calm and cool. And for whatever that works for you personally, and various things work differently for various people. Sometimes for me, actually, going deep into the issue itself is kind of, a bit of, I wouldn't say it's a relaxing thing to do, but it's a bit of, just get it out of the way, confront it and get it out of the way is one way of dealing with it. But whenever you are able to get some time, then you fall back on some of these things, my dear. So I've learned to yoga asanas of late.
Wonderful. So on that lovely note, thank you so much, Rajesh, for being on the podcast. It was truly a pleasure to have you here.
Thank you, Amit. Thanks for the opportunity.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.